Okay, so let me go through the group overview. I assume most people listening to this would know Jaffa Limited, but for those of you that might not be familiar, we're established about 52 years ago. We are homegrown from Indonesia. We're a pure play animal protein producer in focusing on Asian emerging markets. Our market cap was about 300 million as at the end of September 2023. Revenue tracking at about 4.4 billion. We produce protein staples. We're an industrialized agri-food company employing about 38,000 people in emerging Asia. So when you look at our business segments, we are primarily in Indonesia, which is our heritage, where we have poultry operations. In 2022, poultry was about 89% of our revenue in Indonesia, with aqua feed about 6 to 7%. And primarily we're a poultry company in Indonesia. Alongside Indonesia, we also have animal protein businesses in other countries. So that's animal protein other. Primarily, that's dominated by Vietnam. And we've also got poultry operations in India, Bangladesh, and Myanmar. We do poultry across all countries, but in Vietnam, we also do a swine business. And really, our business is a vertically integrated business model. As you can see in upstream, we produce animal feed. We have breeding farms producing day-old chicks in terms of chickens or piglets or fries. And in midstream, it's basically a commercial farm or fattening farm, as it's known, where we feed and create a protein animal product, which we sell. In emerging economies, a lot of our chickens, for example, are sold at midstream live, and they reach the customer through the wet market system. In fact, the bulk of what we sell in terms of chicken in Indonesia is actually through the midstream level rather than the downstream. So only a small portion goes down to downstream. And downstream products, we talk about raw meat products or value-added consumer branded products. I think our core competencies, if we go through it very quickly, in upstream, in terms of the feed business, I think we enjoy economies of scale. Either our scale gives us the opportunity to buy cheaper or to actually have geographical reach in Indonesia, for example, which is the width of Europe in itself with 17,000 islands. I think by having a scale, by being the second largest poultry producer in Indonesia, it allows us to be closer to our customers, which are farmers, as well as consumers, as well as closer to corn farmers, as corn is a major component of poultry feed. Something like 50% of a feed formulation comprises of corn. So being able to reach out, have this geographical reach in Indonesia allows us to actually buy corn during the corn harvest seasons where corn is the cheapest, allowing us to actually reduce our cost of inventory. On top of that, we also do livestock farming, whether it's a breeding farm or a fattening farm, that's both farming. And we have strong experience in farming. We understand the use of technology, the latest technology, whether it's in genetics or in feed or in farm management practices. And on top of that, we layer on that animal health, because healthy animals is what we're all about, healthy, happy animals. So when an animal is healthy and happy, it actually feeds very well, puts on weight, and it's very efficient in the production of animal protein. And how we commit to that is we're the only poultry company in Indonesia that has its own in-house vaccine research and production facility. And that allows us to actually react to animal diseases that can occur in Indonesia and find and formulate the right vaccine for it. So we focus on biosecurity, which is a major issue in terms of livestock farming. And we see that as a risk mitigation strategy to have an in-house facility. On top of that, we have branded consumer food products, which is more a future growth driver because that part of the business is small compared to the midstream selling of poultry, because roughly about 85% of chicken in Indonesia is actually consumed through the wet market system. So Jaffa, as a producer in Indonesia, we sell 85% of the chicken we produce through the midstream. So it goes out live to wholesalers that then take it to the wet market system. So only 15% would go downstream, out of which, say, half will become raw meat products, and the other half will be branded consumer food products. So it's a smaller part of the business today, but I think we believe it's a future growth driver for Jaffa, and how as cities in Indonesia grow, as incomes grow, and as distribution, which is chilled and frozen distribution networks, are built in Indonesia. Now, if you look at growth prospects for the company, so I think it's best to look at growth prospects by looking at the poultry consumption per capita data. So if you look at Indonesia, Indonesians consume 8.2 kgs per person per year, versus Malaysia, which has similar demographics, which consume something like 40 to 50 kgs per person per year. The reason why Indonesians consume so little is because it's affordability. So the GDP per capita in Indonesia is lower. And to imagine 8 kgs, you can imagine that it's a very, very low consumption, given it's the main protein, as pork is only consumed in small amounts in Indonesia. Beef is just too expensive. And as such, when you look at animal proteins, a lot of the Indonesian cuisine is built around chicken as the mainstay. And when that's your main protein and you're only eating 8 kgs per person per year, that's an opportunity for growth. So when you look at my Indonesian listed subsidiary, it's already a $3 billion turnover company. And as such, the potential for that growth, given consumption of staple proteins in other countries, far exceed Indonesia. So we actually operate in those countries like Vietnam, Indonesia, India, Bangladesh, and Myanmar, which are all emerging economies. And their potential for growth is actually linked to the GDP growth in those countries. As people earn more income, I think one of the first things they do is probably buy a motorcycle. But the second thing they do is probably eat better and feed their family better, and actually increase the protein consumption within the family. So we would hope that we can track the growth of emerging economies by actually supplying a staple basic need to most households. So if you look at Indonesia, our ranking today in terms of feed is about 21% market share, 25% market share in terms of day-old chicks. So essentially about a fifth of all the chicken that's produced in Indonesia will come from Jaffa. And we've got strong market rankings as well in Myanmar and Vietnam in terms of day-old chicks. So we are present in these markets in a major way. And the way that we've been able to actually grow in these markets is to use replication and standardization. So by actually having 50 years experience in Indonesia in the breeding business, for example, if we wanted to grow in another country, we'd use the template and what we've learned in terms of designs and blueprints to actually use those best practices and replicate it in the countries, which allows us to actually grow very efficiently in new countries. So coming now to the highlights of 9-month results 2023. Basically, we had a very weak first half, and I think 3Q 2023, so the third quarter, is actually taking us back on track. So in 3Q 2023 alone, we recorded an operating profit of 101 million. If you look at the big numbers in the block below, the operating profit for the 9 months was 105 million. So most of it does come from 3Q. It also shows you that the first half of the year was very, very weak. And that was primarily due to the dampened consumer purchasing power arising from the inflation that's starting to affect consumers, especially in the middle, low income band across all the countries that we operate in. Now, when you look at this 9 months compared to the 9 months before, you can see revenue is kind of holding, but profitability is affected with operating profit going down 35%, EBITDA 24%, and for core PATMI without Forex, which is attributable income to Jaffar Limited without the foreign exchange impact, it's a loss of 17 million for 9 months. Having said that, with the kind of poor bottom line, from an EBITDA perspective, we are still recording an EBITDA of 195 million for the 9 months. When you look at the bubbles at the bottom, you can see that poultry feed margins in Indonesia have improved in the last quarter. Poultry prices have also improved in the last quarter. And when you look at the swine business in Vietnam, which is, as you will see later, a part of the business that's been recording losses and pulling down our numbers in terms of profitability, that business, in terms of swine at least, have broken even for the 9 months, which is something that has been plaguing us in the first half of the year in terms of the results from swine. I think this says there's a clear trend in that the 9 months results were weakened by the first half performance, but that trend is reversing in 3Q, both from a solid contribution of feed as well as higher selling prices of poultry in Indonesia and swine in Vietnam. Now, if you look at the two main segments, so that's PT Jaffar TBK, it's a good performance from feed, and the weak poultry prices that we saw over the first half of the year, in fact, since the second half of last year, have started to improve in 3Q 2023 because of rebalancing of supply and demand in Indonesia. I think for animal protein other, which is basically talking about Vietnam, I think there's higher selling prices as well as a tangible reduction in production costs. Looking at what we call the rolling 4Q core PATMI without Forex for the group, so that's 4 quarters rolling into the number of $53 million loss at the end of 3Q 2023. However, you can see the graph turning. So really, 3Q 2023 is recording a profit of 32 million. And that's turned around, I think, from the line that's been dropping over the last 4 quarters. When you look at it from the segment perspective, you can actually see this turn is both in TBK, which is recording a larger profit, as well as a profit in animal protein other, primarily from Vietnam. So the key message for 3Q is performance is back on track. So for PT Jaffar TBK Indonesia, I think I don't want to repeat myself, but operating profit much better. And the prolonged industry Oversupply is actually been fixed with adjustments in supply in the second quarter of 2023 and into the third quarter. So prices rebounded, and basically the performance has turned, if you look back over the last 4 quarters, into a very strong third quarter 2023. Similar story with Vietnam. So Vietnam actually follows 3 quarters of losses, primarily due to the swine operation as well as the poultry operation in Vietnam being affected by inflation and a lower purchasing power, as well as being affected by impacts to the inflation across the world. So what does that mean? Essentially, in the fourth quarter of 2022, in Vietnam, there were a lot of footwear as well as clothing factories that actually shut down because of the lack of demand from the West, from developed countries that used to buy footwear and textiles from Vietnam. And that inflation impact had started to bite the purchasing power in developed countries. So that actually waterfalled into factories closing in Vietnam, a lot of people being laid off, and as such, they didn't eat as well in the fourth quarter and into the first quarter of 2023 during Tet. So this caused an oversupply because basically a lot of protein producers had started to build stock up, and at the impact of people losing their jobs meant that there was an oversupply in the market, and hence you see the losses that were felt in 4Q, 1Q, and 2Q in Vietnam. I think that's really gone away with a recovery in profitability in Vietnam due to higher swine and poultry prices being enjoyed finally in the third quarter. But also from the perspective of the company, I think there's been a tangible reduction in our own production costs after a very, very tough 3 quarters. So for Vietnam, it's really a turnaround story, a turnaround from 3 quarters of losses into a positive quarter in the fourth quarter of this year. So if you look at the arrows on the left-hand side, you can see the arrow showing a turnaround for both APO Vietnam as well as for Japfa TBK. And that transcribes into a turnaround story for Japfa Limited, given that these two segments drive the profitability of the whole group. So from a 9-month perspective, however, we are still down from last year. So whenever you look at the 9 months results compared to the 9 months last year, we are down, and that's driven primarily because of the very poor and weak first half of the year. So I can't reinforce that more. Essentially, I think if you look here, we are saying the same thing. This is looking at the segment PT Japfa TBK. I think you see flat revenues. However, profitability is still down compared to the same 3 months last year. I think this is interesting in that this is the quarterly numbers that you see in PT Japfa TBK. And if you look at the quarterly numbers and the way to read it, you can see on 2023 on the right-hand side, the third quarter is 87 million profit. The second quarter was 47 million, and the first quarter was basically a break even. And you can see the cyclicality of the quarters and the profitability. And this cyclicality is not exclusive to 2023. If you look back over the last 4 years, you can see there's no such thing as a flat quarter. I mean, what you have is each quarter being dependent on a lot of macroeconomic impacts on demand and supply that affect the pricing of our day-old chicks and our broilers. This results in a really cyclical or volatile quarterly profit. But I think when you look back over the last 4 years, the operating profit itself has never been below 170 million. And hopefully by the end of this year, that will be the same for the year 2023 as well. So really what we are saying is there is a quarterly cyclicality but it tends to even out over time. And that's to understand our business in animal protein. So given that we did have challenging conditions, what we did in Indonesia was to recalibrate our growth plans. Basically, we've frozen non-essential growth capex since 2020. So in Indonesia, we used to spend something like 200 million in capex in 2019. But since COVID hit in the second quarter of 2020, we have essentially cut that number down to about 110 million. And this freeze has continued over the last 3 years and into 2023 as well. We've also streamlined our poultry breeding operations. What that means is actually we've reduced the size of our business because the impacts of the last few years, the global impacts, the macroeconomic impacts have been, I guess, loading one on top of the other. So we started with COVID. COVID affects movement of people and affects jobs when it first started in 2020. That affected demand because basically purchasing power went down for a lot of people. And then came the Ukraine issues, which increased the raw material costs for our feed business, including transportation costs. So that increased the cost of goods sold. So we had to increase the selling prices. And again, with the lower purchasing power from COVID movement restrictions, I think that was already impactful for us over the last 3 years. And finally, in 2022, we saw inflation with increasing interest rates, etc., affecting, again, purchasing power globally as well as in the markets. So all of this meant that actually we feel that it's not the time to grow our business, that we should de-risk by actually recalibrating our short-term growth plans and wait for the right moment. So today, I think we've looked at being cautious about how we see things change in the future. So there is a question out there that says, do you think macros are improving? I think macros to a large extent are actually driven by what's happening by the bigger pictures globally. I think everybody is well aware of the issues that face us on a global level and the continuing and newer issues, for example, in the Middle East that are affecting us now. So it's very hard to call. I think from our perspective, if you look back at this graph, essentially our business, our efficiency, our delivery of poultry in Indonesia has stayed the same over the last 4 or 5 years. But each quarter has its own inbuilt cyclicality. Now, even though we've had COVID in Indonesia, you can still see we deliver 170 million because essentially we produce a very staple, basic protein for people. And that doesn't change. I mean, it changes growth in that it's very hard to see GDP per capita growing under the current environment. So, and if GDP per capita doesn't grow, that means consumption doesn't grow because people are just eating so little. The potential remains the same, but for the moment, because of the macros affecting purchasing power, for the moment, we have enough capacity so that we actually don't need to build new capacity. Maybe we need to build minimal capacity or refurbish or refresh our operations and fixed assets, but we really don't need to actually have expansionary growth capex in a big way. So I think what we are is in a stabilization mode. but we have built a platform, I think, for long-term growth. So when you talk about our business, I think we've been around 52 years in Indonesia. We've gone through cycles like this. Cyclicality is part and parcel of our day-to-day operations. So today we are talking about cyclicality to a certain extent outside our control, but our operations, our efficiency all stays the same. So it's a matter now of whether we can grow today. And I would say that we are holding back, waiting for the right moment. But we do have a strong platform for that growth, having 20% of market share in Indonesia. We are looking at driving future growth, not only from the GDP per capita growth, but also from expanding our downstream business. And this is something that has arisen because of COVID. So we find that in the bigger cities, consumers and other B2B businesses are more accustomed now to online ordering. And for us, that means we can reach out to consumers as well to other businesses through an online platform. So when we talk about building our downstream business, we actually have to talk about building an entire frozen and chilled distribution network, as well as the platform to actually reach out more to the customer itself. This will take a few years, but the initiative has seen an urgency, I guess, coming from how patterns of buying have changed post-COVID. I think the other areas that we are looking to grow is aquaculture, and we have a little bit here to say that today our revenues have shown some significant increases from 4 years ago in aquaculture. A lot of that is actually a feed business. So 75% of revenue in our aquaculture business today is selling of feed. And feed is a great business because it's a pillar of profitability. It's not so subject to macroeconomic demand and supply changes, because feed we can always pass on, and basically we always sell feed at a profit and never at a loss. I think that's a very solid business, albeit that the profit is about 10% on normalized terms outside all these macro issues. Typically in Indonesia, for example, the feed profitability has been something like 10 to 11%, other than what's happened in the last few years. I'm just looking to see whether I actually have that number in the appendix here, so I can quickly squid. So in here, and you'll see it in our PT Jaafar TBK presentation deck that's uploaded every quarter as well on a separate website. We actually track the feed margins, poultry feed margins in Indonesia for a 10-year period or more. And the statement says poultry feed operating profit margins have been stable around 10 to 11% as a feeder's ability to effectively pass on raw material cost increases as well as currency changes like rupiah depreciations into the feed selling price. It shows you the resilience from the poultry feed business. Now, that resilience is somewhat lowered because of what's happened since COVID. Essentially, we've reduced our margins, but still the pass on works. So we always make money in feed. So feed is that stable pillar of profitability. What you see when you see the quarterly changes in our profit comes from the day-old chicks and the broiler business. Now, the difference is in day-old chicks and broilers, that product is perishable depends on demand and supply dynamics. Feed, on the other hand, is very different. It actually is a very stable part of the business, and it's actually the base margin of our profitability. We have a strong feed business, and in aquaculture today, we've built a strong aqua feed business. We've also got a good shrimp broodstock multiplication center. And for us, this is 300 million revenue business with the potential to grow in the long term. We've also got the vaccine business, as I said. I won't dwell on this except to say that, again, it's a very good business. It only turns over about $30 million a year, but its profitability is very strong. We export our vaccines to 14 countries, and it's a very research-based operation, not only research, but also production. We have production facilities. So for us, it's a strategic defense against one of our key risks in animal protein, in an animal protein business. So when we talk about animal protein, other countries, I think I'll quickly say that animal protein in India, Myanmar, and Bangladesh, basically they are on non-growth stage at the moment. Feed is the major activity in many of these countries, and collectively they've recorded a positive EBITDA, but it's a very small number, so we tend not to talk about it. Especially in Myanmar, it's very much a holding pattern, and Bangladesh, it's a very new operation for us. We're just trying to launch a feed business there. But animal protein Vietnam is the mainstay in the animal protein other segment. It turns over quite a lot of revenue. I think you look at it from an annual perspective, it was 789 million in FY 2022. This year is tracking 600 million for the 9 months. And you can see that in Vietnam, it's been affected not only by COVID, inflation, but also this thing called African swine fever, which affects swine. And this African swine fever, which you see in China, started back in 2019, which affected our operations there quite dramatically, and research has resumed again in 2022. So when you look at our numbers in 2022, 1Q 2023, 2Q 2023, I think it's affected by a combination of ASF and inflation as well. So I think I explained what happened in Vietnam, but I think in Vietnam, we believe it's a platform for future growth. So while we have issues today in the market, in the long run, we are very, very, very optimistic that Vietnam is going to recover and show a very strong GDP growth. This is based on the FDIs that are coming into Vietnam, the shift of many multinationals from having a China production facility to adding their new facilities in Vietnam. Given the US market does demand some outside of China technology products, as well as people de-risking having all their factories in China. And that's happening with Korean companies, with Japanese companies, and with MNCs. So it's a matter of time before Vietnam comes back or shifts its focus from what used to be more of a footwear textile base in manufacturing to more technology and a wider base of products. So I think that's going to happen over time in Vietnam. We were aggressively growing in Vietnam. So you can see in 2022, we set up a new feed mill, increasing our capacity to 1.8 million tons a year. We've also in 2022 built a new slaughterhouse in Vietnam, and we've started to construct a vaccine factory in Vietnam as well. In terms of the businesses, we've been growing our swine business. We start from great-grandparent farms in Vietnam. So you go down to grandparents, you go down to parent stocks, and then you start producing pigs for the fattening farms. And we also have a focus on color bird, which is basically ayam kampong or kampong chicken here in Singapore. but it's the same thing. So the preference for protein in Vietnam is number one, pork, number two, color bird, number three, broiler. So hence, we've grown our color bird business so that it's the revenue in color bird now exceeds that of broiler in 2023. But because of what happened in the fourth quarter of last year, where we, as I explained, we had a drop in demand that was very unexpected. So the whole industry had an oversupply, and as a result, we lost a lot of money in 4Q, 1Q, and 2Q in Vietnam. And what we had to do in reaction of that is we immediately stopped and recalibrated our aggressive growth plans for Vietnam. So we froze non-essential growth capex in Vietnam from the fourth quarter last year. And we actually cut down the size of our operations as indicated or hinted by the sow breeding farms being depopulated and closed down. Also, reduction of our parent stock population. So that means our production of piglets have been essentially cut back in Vietnam. Not only growth, but we actually reduce the size of our facility and reduce the size of our business, because we are of the opinion that Vietnam will take time to recover. What I talk about, the long-term GDP growth prospects in Vietnam, we did not think that was going to happen in 2023, nor do we think it's going to happen in early 2024. So we'll just wait and see. So at the moment, we're on holding pattern in Vietnam, waiting for indications that the macroeconomic activity and the macros in the whole of Vietnam, which affect GDP, which affect employment of people, improve. When that improves, I think then we get a sense that those people are going to eat more pork and color bird, and that's the time for us to actually think about growing again in Vietnam. Other financial highlights, I think I'll talk about CAPEX, which does reflect growth here. So I said in 2019 in Indonesia, which is the dark orange, we spent more than $200 million in CAPEX. That's been cut down to 100 plus million, 120 million in 2022. In 2023, we are still running at that level. So you can see there's not a lot of growth for CAPEX, because most of it, like $50 million, is just maintenance CAPEX in Indonesia. When you look at animal protein, other 83 spent last year was basically in Vietnam. And this year it's 19 million. So you can see the cutback that's happened since the end of 2022. I think today in animal protein, other for 2023, about 95% of the CAPEX that we spend is projects that we started in 2022 that are finishing in 2023. So very little growth CAPEX. So I think there's a question on any targets to clear to invest. I think it's not targets, it's how we think about the economics in each country. So the macroeconomics. If we feel that the country is about to grow and that GDP growth per capita flows down to the low income band, so it doesn't stay just in Jakarta, for example, but actually starts to filter down to the low income band. Those are the people that eat only 8 kgs per person per year, or less if 8 is the average. So those are the people that we can expect to eat more of what is a very staple basic protein, and hence drive both the top line and the bottom line growth for our company. So I think if you talk about the targets to clear and when it's a good time to invest, I think it's more macroeconomic things that you can track. And that would be how I would put it. Because from a company perspective, we do what we do. We've got economies of scale, so we're of a size that makes us enough money. We've also got the right mindset and technology for our farming businesses, both in breeding and in fattening. We de-risk in terms of making sure we've got vaccines and biosecurity to protect our assets, which is our animals. And I think we've got the right ingredients to operate in emerging economies as well. We understand the dynamics. We have been around for 50 years. We understand the cyclicality. We know how to handle cyclicality. I think what has shown with the adjustments of our capex over the last few years, including the adjustments in 2023, reflect our nimbleness in reacting to macroeconomic factors like inflation and things that could affect our business. So that is living within our means. So it's very important that if we feel our EBITDA is going to go down, we have to cut down our capex, for example. So, we do say that while we are really happy with the 3Q improvement in profitability, we are conscious of the new potential disruptions to all the macro and economic conditions around the region with geopolitical tensions and things outside our control. But I think what we try to do is to be one of the lowest cost and best producers in each country. Now, I take you back to this graph. You can see again that our poultry feed margins in Indonesia have been very, very stable until the recent few years, where you've actually see COVID starting to impact on the operations, along with inflation and everything else, the macros that are affecting our margins. Now we are back to running at about 8% margins in Indonesia. But, when macroeconomic conditions return, when GDP per capita gets more comfortable in Indonesia, I think one of the things you will see is our poultry feed margins resuming back to their normalized level of 10 to 11%. And that would be an uptick in our profitability almost immediately. So let me go to questions. I think supermarkets have fresh chickens from Indonesia. Is that Jaffa? Yes, it is. So that is a nice question for me. Essentially, what happened, I think, globally with COVID was that a lot of countries realized that food security is critical. And for Jaffa, our philosophy was to be one of the best, lowest cost, most efficient producers of chicken, for example, in the country you produce that chicken. So we hardly export. And that means we were always looking at being the best in that particular market. Because whatever happens in that market, no matter how bad the macros are, no matter that you've got COVID, no matter that you've got a revolution like in Myanmar, governments have got to feed people with a staple, and in our case, it's chicken. So you can see our business was hardly disrupted during COVID, maybe growth disrupted and margins disrupted, but the business itself continued, and we continue to make a profit, as you can see from our numbers. And I think that doesn't change. So when you talk about food security, I think Singapore has realized that its food security in terms of chicken, not having chicken rice, a couple of years ago because of some issues with Malaysia. I think it was an opportunity for us to showcase that we can actually deliver chicken from Indonesia to Singapore across the sea, actually. So chickens arriving by boat. I think we've been successful in doing that, in getting accredited to do that. and getting our chickens to supermarkets. It's still not as big a business until we get clarity that this is a continuing requirement, because we actually have to build farms in Bintan specifically for the Singapore market. And you can imagine that when you build a farm, when you harvest the farm, all the chickens have to be sold, but then it takes another 35 to 40 days to build up the next batch from that farm. And so you get supply into Singapore that's very patchy from our business until we know that we're going to get a consistent supply into Singapore. Um, interest rates, interest rates should be flat or go down. Okay. I think you're probably correct. There could be a Fed increase by 25 basis points, albeit unlikely. But even with just pure interest rates, I think globally, um, the interest rates have increased the cost of everything. And that flows, that's what we mean by inflation. It's increased the cost embedded into every product. So unless the incomes increase at the same time, you actually get a squeeze of purchasing power. That affects the smaller low income band in Indonesia a lot in terms of them being able to afford protein, actually, being able to afford chicken. I mean, when you talk about 8 kgs per person per year, that's less than 1 kg of chicken per month. And that's 60 meals is the main protein. If you go to Indonesian restaurants, you can see that chicken is the mainstay. I mean, and when people eat so little, it is affected by the GDP per capita that goes down to the low income band. So I think the Middle East issue, if it does get worse, could affect oil. And when oil goes up, I think it starts to impact again everything. It impacts the purchasing power. So for me, it is promising that interest rates alone will not go up, but I don't think the worst is over until we can resolve this Middle East issue, until we can actually see interest rates start to give confidence even to the developed countries to spend more to buy new shoes. I think even in the developed countries like the US and Europe, we're seeing a squeeze. And that means whatever is exported to those countries out of Indonesia, Vietnam is also affected indirectly. Valuation of Jaffa shares. I think there's a question there. How would I talk about the valuation of Jaffa shares? I think one way to look at it is to say we own 55% of PT Jaffa Tbk, which is the Indonesian subsidiary I talked about. That is actually listed in Indonesia. And you can get a valuation of PT Jaffa Tbk and the 55% of that effectively. And that reflects that we are undervalued in Singapore, just on basing that on the market valuation of a listed company share being PT Jaffa Tbk, the Indonesian. So on top of that, I think we've also got Vietnam, along with 3 or 4 other potential countries. But, if you look at Vietnam and you believe in the turnaround of Vietnam, which I don't know when it's going to come, but my belief is it is going to come. If you believe in that, I think there are very few stocks that you can actually invest directly into Vietnam, unless you go to the Vietnamese stock exchange. And I think we are one potential stock that allows you an entry into Vietnam with a Singapore dollar investment. So I think that can be interesting. And actually, Vietnam is not even factored into our valuation if you take into account what I just said on the 55% ownership of Indonesia. So yeah, I believe, of course, we are undervalued, and you can see the company has been buying back shares since the third quarter results have been released, as an indication that we believe that the valuation is low at the moment. Okay, I believe there's no more questions out there. Um,
Yeah, thank you. Thank you, Kevin.
Thank you.
Thank you for your sharing and answer our questions. And that's all for tonight. So we all say bye to our users. Bye
Okay, thank you for
bye.
listening, whoever was there. So thank you.
Bye bye.
What do I do?